Hello, good morning.
Good morning and welcome to the Smooth Breakfast on Smooth 98.1 FM. It is time for Business Express as we get ready for our guest to join us this morning. I would say make welcome to Ngozi Odum, banking analyst, Cardinalstone. Good morning to you.
Good morning.
Well, you're just the right person to talk to on a Thursday morning. Everything FX. We're sure you would get it. You've got us all covered. So let's get into this story because Nigeria's story for this week and even the previous one has been FX all the way. So let's begin to dig into this, realizing that some article that was released by two seculars came out. They were all FX related by the CBN trying to control the behavior of the banks so they don't feel the speculations that triggers this naira needing oxygen most often than not. So help us now just get a sense of, can we explain the first circular to the audience right now from the CBN targeting bank speculation in terms of FX?
So if you look at so if you look at the details within that circular, it was really speaking to how banks handle their net open positions. And what is banks' net open position is pretty much their exposure in foreign currencies, their assets and liabilities. So if you look at that circular, it was detailing how banks should treat their net open positions. So in the case where your net open position, where your assets is more than your liabilities, is considered net open long. And then in the case where your liabilities is more than your assets, is considered net open short. So in the circular, it detailed that you should have 0% of your overall net open of your shareholders' equity for net open long, pretty much essentially saying that you should not have a net open long position. However, you can have a net open short position only to the maximum of 20% of your shareholders' funds, which are in Naira. So if you convert your net open shorts from whatever currency to Naira, it should not exceed 20% of your shareholders' funds. So pretty much the basis for that circular just pretty much itemized that going forward, banks should always have assets that match their liabilities, or if they should in fact have foreign currency liabilities, it should only exceed their assets by about 20% of their shareholders' funds.
We put our minds to rest. But again, just one more question to rest this one. Would like your assessment of this circular and if this would seem like that voice of the principal that comes in from his office to shut the students up, to make them just let's have some peace, like saying it would rein in the speculation in terms of Forex.
So the question is if it would rein in the inflation of Forex.
Yes.
All right.
The speculations around it.
I think in a sense, it's targeted to banks that have long positions, net open positions that are long. So the excess of their assets above their liabilities, which is the long position, to unwind all of those and then, convert to Naira. So in the case of that, if you're unwinding your excess in long position, that means you have excess dollars or whatever currency that may be, and you're unwinding it. So that means you'll be looking for a way to convert all of those currencies to Naira. And that should in fact increase supply in a way. So yes, it could also lead to improvement in supply for FX.
That leads me to, it was released just yesterday, Wednesday, and they have to comply by today. So the next question is it enough time for them to get this done?
Yes, it was also our thoughts. And when we engaged some of the banks, I think it also came as a surprise to them. So in terms of the set time limit, which is very strict, I mean, it came out yesterday, like you said, and then the compliance is today. I think what banks will do is that they will have to engage with the regulator in terms of looking for forbearances in order to meet this timeline, because you also have to understand that some of the assets, the composition of these assets, some are not as liquid as others. So in order to unwind these assets, it will take some time. I think the CBN in their, magnitude can also offer some forbearances in order for them to comply, because given the time difference here, is really quite strict.
It's looking like the CBN, Cardoso CBN means business. So that will lead us to, would this in any way help in the dollar liquidity for Nigeria?
In one sense, I mean, in the immediate, it should or it could, but I think for FX, the FX, situation is much larger than, this immediate unwinding of net long positions from banks. It has to do with structural issues and improving supply generally. So that will also have to factor into other things. I think the general expectation is just increasing exports, proceeds from exports. And so that in its way is the most fundamentally driven thing that can drive an increase in supply. So, I mean, in the short term or in the interim, I mean, this could improve FX supply, but I think fundamentally going forward, we have to look for structural ways in which we can actually increase our FX supply in the market.
All right, I'll come back to you shortly, but I need to get back to the client. That's our listener at this moment, because I know FX matters. Everyone talks about it. Even the woman who sells pumpkin across the street will tell you dollar don't enter. So let's quickly let them come into the conversation also. If you're listening at this moment, I have got Ngozi Odum. She's helping us understand the CBN targets bank FX speculation. And so we'd like to know what your thoughts are. Do you think this would get these banks to comply? And let's have some sanity and let the Naira breathe in terms of in the committee of denominations of currencies. Let's hear what your thoughts will be on 0809 444 0981 WhatsApp messages only. So this open short, long short you've talked about. Let's also get this factor in quickly, since we want this speculation to be tamed, knowing that the CBN too has also released bulk of money to settle airlines in terms of dollar, and knowing this money is still in the banking system right now, how would that play out affecting this policy?
So I think the CBN intervening in the FX backlog has been one that, has been touted as one of the reasons, that foreign portfolio participants, have remained away from the markets. And if you recall, the essence is to drive FX supply. So in a sense, you're looking to inspire confidence amongst, foreign investors. And so foreign investors are looking to see that, they can repatriate back their funds once they come into the market. So I do think that is a welcome development. We've seen progress on that front. Even this last week, we saw another additional, I think about 500 million, if I'm not mistaken, was cleared. So that should inspire a little bit of confidence. I mean, there's still a lot of way to go in terms of clearing the FX backlog, but I think it's an improvement on that front.
So that takes us to the exchange rate these days. The exchange rate is looking more like our temperature these days. We need to take it as we take our temperature. Let's get to what it settled for yesterday. On the official market fell to 1,455 naira to the US dollar, while the parallel market was quoted at 1,520 naira to the US dollar. What led to the official rate weakening to this level? Is the CBN giving the market more room to determine the rate at this moment?
I think it offers more transparency. I mean, if you look at the initial consensus for, the unification of rates, it was so that there is one rate for each and every one. So whether it be the parallel market or the official market, even though we know that parallel market behavior is different from what happens in the official space, but if you even take a cue from other markets, you see that the parallel rates do not differ so much from the official rates. So if you bring it back to this question, I think the devaluation in the official rate had something to do with also the change in methodology for FMGQ's calculation of the rates. But I think it also offers some sense of comfort in looking at the disparity between the parallel market rate and the official market rate and bringing it closer to what it is based on market forces.
Okay, so because let's even look at the official rate, 1,455 naira, and the parallel market rate is about 1,520. So that's a difference of about scarcely less than 200 naira, I guess.
Yes.
Okay, I see the logic you're trying up there for us. So let's quickly, your tray is almost empty for today on Business Express. Let's get into this one. So what other ways can Nigeria devise to improve this dollar situation deficiency for us?
I think we've already touched on it. I think it's just increasing supply. The the consensus is that we need to move to where a place where FX will be determined, or FX rates will be determined by market forces. Hence the reason why we've seen all of these policies, and the ones that started it was actually the unification of rates with the willing buyer and willing seller, so that market forces actually determine these rates. And for it to be market determined, you also have to increase supply, because if demand outweighs supply, then you will always see a devaluation of the naira in that sense. And thus the consensus is that we should all seek to improve our supply by increasing our exports, as well as do what we can in terms of increasing, foreign investors' participation, repatriation of funds flowing into the market. So that would help in terms of increasing supply.
So, Ngozi Odum, until liquidity improves in Nigeria, what would the impact of this weakening of the currency in terms of inflation and all that? Just sum it up for us in about a minute.
I think, just like you said, everyone, is wakes up one morning and just sees a new rate. I think going forward, until we see, a lot of work done in terms of improving FX supply, we can still expect to see some devaluation. I mean, fundamentally, what is driving all of this devaluation is the lack of supply. So until that is tackled, we can still expect to see further devaluation.
All right, before we let you off, let's get messages in. Dollar matter, it concerns everybody, and see it's triggering response already. Tayo is here with the message, and he says, banks have become hydra-headed in Nigeria with the manner they declare profits at the expense of declining economy. They dictate the direction of the economy, and other financial institutions follow suit. The CBN directive is a welcome development. I just hope the CBN can see this through Tayo's thoughts this morning. Then Fine Oluboroko comes up with a message, and it tells us this: the CBN bank reform seems it may improve the dollar liquidity. I think the CBN under Cardoso is trying its best to improve the economy. We need to give them time. Fine Oluboroko's thought. So then our final message now comes in from Ahmed from Ogudu. FX supply is just the main solution. Is it really true that Nigeria's crude oil has been sold to secure loan, that is, being used to settle loan? That's why NNPCL could not get FX supply to Nigeria. You want to just take a stab at that one before we go?
I think he's referring to the deal between the CBN and Afrexim for a line of credit where, they were going to give out proceeds from their oil, crude oil, for a $3 billion dollar loan. So I think that's the structure he's speaking to. So it's aimed to improve supply, it's aimed to beef up the foreign reserves. So I just think, like you said, is a way to improve supply.
Final one here. Cisco Delgado threw this one earlier on to take a jab at me when he says, we can only throw punches on dollars and pounds by exporting our products to other countries and also stop importation of goods we produce locally. Cisco Delgado, our final message. And this is where we want to say thank you to Ngozi Odum, banking analyst, Cardinalstone. Thank you. You're the right person. Every time I want to talk FX, we'll go straight to you. Have a great day.
Thank you. Thank you so
Bye.
much. Bye.
That's it on the show today. It's been Business Express. Stay tuned. Freshly pressed at 7:30.